Good afternoon. Normally I say good morning, but now I'm here in Amsterdam, so it's only good afternoon. Of course, that's who I am. Only thinking about myself. No, good morning as well for anybody joining from a different time zone. Maybe even good evening. Great to have you all back for this week's Dairy Cafe. We're all in one room together in Amsterdam in the Vesper office.
Good to have you back.
Yeah, good to be back. Good to be with you guys in the same room for the second episode of this year.
We'd say it'd be cold out here, but for you, it is actually quite warm compared to what you had in Chicago.
Yeah, compared to Chicago, it's fine. Yeah, it feels like summer. So great to be here. Get a bit of a relief from the cold temperatures. So it's only just freezing here. But what's not freezing is the market. And I must say, a market that I wasn't expected to see heating up after such a long time of not much heat. The S&P market. Jasper, what's happening?
Yeah, it's been quite an interesting one. It started all the way at the start of January already, so it's not something that really changed over the past couple of days. But I think definitely something that many have been they didn't expect to take place at the pace that it has. Some have called it a short squeeze in milk powder, which is highly unusual. So that definitely rings some alarm bells across the dairy markets. But in total, yeah, we've definitely seen an uptick in especially milk powder prices and US pricing in general. At the same time, fundamentally, I haven't really seen much change. And that's exactly why this sudden squeeze doesn't really make sense from a long-term standpoint. But it doesn't prevent prices from going up at all, like we've seen this last and previous weeks, especially during the GDT events, like we had one today. That's definitely those are the times in the week where we see going up.
You said short squeeze a few times.
Yeah.
Could you please explain to people that are listening? I'm sure we have a broad range of people listening. What do you mean by short squeeze?
Yeah, so essentially, I won't make it in a really extensive explanation, but essentially what we've seen is that a lot of traders especially had a short position. They felt like prices were going to go down, so what they would do is they would already sell the product and then buy it back later and just make kind of a profit by going short. The problem is that creates a moment where if everybody sells at a certain point, they need to buy it back. And when that moment that they need to buy those positions back comes at a time where no one's really interested to sell at that lower price, ultimately at that new point in time, you need to find a new seller that is willing to sell it to you at that lower price. If that's not there, then suddenly we have a lot of buyers trying to turn their position in a market that moves up. And then, some of them see their position kind of be squeezed a little bit as the short squeeze. And they decide, you know what, I'm also going to accept the loss. I'll just buy it back at a slightly higher price just to make sure that I have the position closed. Yeah. And that's why sometimes these squeezes, and we have seen one in milk powder right now. We've seen one in butter, for example, previous year several times throughout H1. Those are really called short squeezes. It's a short period in time in which fundamentals are essentially out of the window. And there's a lot of buyers being interested in a few loads that are available. And it really creates a tight market where prices move up rapidly. And they're called a short squeeze.
Okay.
Much of the competitive difference that we've seen on S&P in recent months was currency related. And we looked at currency heavily with such small margins between the different regions that currency could be the deciding factor for a region to be relatively expensive, relatively cheap. Has currency played any part of this, or is it totally outside of that?
No, it definitely played a role. I think we need to separate the discussion a little bit because currency has made a massive impact, and especially for the Europeans among us, it's been quite painful because the US dollar has been very, very cheap. So if we scroll down, we can have a look at the euro dollar exchange rate over the past weeks. It reached $1.20 over the last week, and it really kind of creates quite a painful position for many European exporters that want to sell to the rest of the world. However, even if we include the currency fluctuations, we still see that European prices in dollars are still much cheaper than they are in the rest of the world. So it plays a role, and on a weekly or sometimes daily basis, it can prevent you from actually booking those exports because a US exporter suddenly becomes 2, 3, 4% cheaper in a matter of a few days, few hours. But ultimately, Europe remains by far the most competitive region globally for milk powder. And yeah, as it stands now, as I mentioned, fundamentals, they were out the window, but they underneath the surface, they're still there. I think Europe will stay the cheapest region for milk powder in the coming months.
And how do you expect demand to follow that? Do you expect it to increase a bit because, no, sorry, supply to increase a bit because demand has increased? We know that butter, of course, is being produced at quite a bit of a win, with cream being that low.
Yep.
So we can expect, towers to be filled. Or do you feel like the demand basically outweighs the supply that we have, and we didn't have that much stock either, which
No, I think there's a lot of moving pieces. I think fundamentally we're still in the weaker market. Why? Because we have a lot of supply at the moment that we're dealing with, and the demand, if we kind of look at global demand for milk powder as a whole, hasn't necessarily grown at the same rate that the supply has. So I think we're still looking at a cheaper price level for S&P. And I must admit that an increase of, well, in this case, this week it was 5%, but let's say it was almost 10 to 15% over the past couple of weeks. It's not founded by supply or demand fundamentals at the moment. We do see that Chinese stock levels are low. They have been active on the GDTs a little bit more because they wanted to buy some volumes. Also, Southeast Asia has done that, but it's rather a timing thing. Also with O'Neill tenders, for example, they have a few tenders throughout the year, and periods like that, it looks like there's a lot of demand, but actually they're spreading it over a couple of months. So it's really about concentration of certain demand, but as a whole, supply still outweighs all the demand that's out there at the moment.
So you really do believe that it's just because of the last couple of weeks we've seen a bit of a surge in demand, more than we usually did, which basically pushed the price up a bit?
Yeah. However, there is a kind of a sentiment element to this. I think it's really good to kind of split those up. Again, there's a lot of splitting up today, but I think it's very crucial to really look at long-term pricing mechanism and movement on a fundamental basis. On short terms can definitely be influenced by the sentiment. And we've seen it before that when everybody thinks that A is going to happen, as in we expect the milk supply to shrink in let's say roughly around peak flush, so that's around 3 to 4 months. Everybody thinks so. They're short until that moment happens, and then suddenly the market turns. It always feels like that moment that everyone expects the same thing. It's not going to take place.
It's often the opposite.
And I mean, we are working to get towards a shortage again. It's not there yet, so yeah, I would be surprised if this really is kind of the tipping point for the entire market, because it shouldn't take place right now. But ultimately, yeah, we are headed there. Why not? Why can't it be a little bit early?
I asked our commodity co-pilot, so Vesper's own Vesper GPT, and before in preparation for this, that I needed a concise overview what's happening in dairy. I asked for S&P, whole milk powder, butter, Gouda, cheddar, WPC 80, WPI, and some quick insights for products. And for whole milk powder, I got a really nice sentence, is that it pulled higher in sympathy with S&P.
Yeah. I think in general, we see that much of the milk powder demand at the moment comes from countries in Asia, and China has been on the forefront. We have some stock levels. I'll actually pull those up of China that I can show you guys. I like the word sympathy, but in general, the most important thing is that the same as the case for skim milk powder, whole milk powder markets moved up because there's suddenly kind of a concentration of demand. Especially on things like the GDT events. It's an auction. There's a limited amount on offer, and if there's more and more buyers trying to pile up for the same amount of product available, you're going to see a higher price. But it doesn't mean that that's kind of the new normal, and we're now moving up. But if we zoom out to the whole milk powder, let me check. Whole milk powder stock levels in China, they are around really, really low levels. So this does kind of support that, okay, we will see a bit of the Chinese demand coming in at the start of the year, like we have seen in the import numbers for December a little bit already. It's going to move up. And the same for skimmed. We definitely see that also for skimmed markets in China, there is room to stock up at the start of this year.
But do you expect this to go back to levels that we've seen in the past? Those in years 2022, 2021, where I'm sure demand was very strong, economy was super strong. It doesn't feel like we're talking about the same China as we used to.
No, I do feel like the total amount of imports will grow to a certain extent to roughly where we were at in those levels for S&P. They are making a lot more whole milk powder themselves.
Yeah.
I think what I love to look at is the comparison between production and import and how much of their total supply is dependent on imports for China and how much they've produced themselves. I think in recent months we still see that the imports of China are still almost twice what they produce. So it's really more than 2/3 of the market is dependent on imports.
Yep.
But for whole milk powder, that ratio is starting to turn more towards well, I wouldn't say fully even, but
We're stronger.
yeah, in let's say a couple of years ago, we really had a large import market, but now we're actually seeing that import is smaller than production. So there is something happening.
Just from my perception, could you add consumption to this and take out import for a sec?
Yeah.
Yeah. So we see that in the last week, production and consumption are roughly equal.
Yeah.
Or getting there, not there yet. Still a lot of metric tons, especially for Chinese consumption.
And it's a bit what I'm saying here. I think is, look, the production hasn't per se increased massively since 2 years. It's purely their demand has
Yep.
been
Oh,
slow,
absolutely.
and I think it's mostly due to the economy that we've heard over the last year.
Yeah. So the stocking up will definitely play a factor or be a factor, but I don't think it will play a big role. And it will be outweighed with what I was about to show you guys. If we take, for example, the production numbers for Germany, which is just one of the many examples that I could have taken. If we take a look at the production surplus in November, 30%, 34% in October, 34.5% in September, 24.5% in August. These are numbers that are unseen. And it's really, this ultimately outweighs all the demand.
But it seems like if we talk in the market right now, it does seem like there isn't that much stock available. It feels like suppliers are saying, no, I'm basically sold out. I'm happy not to sell anything for the coming month, 2 months.
Yeah.
Or I've got something for you, but we're talking about Q2, Q3, and on the spot market. How can we explain that?
There's many factors, but I think one of the most important things is we saw quite a weak market before the end of the year.
Mhm.
Why? Because a lot of sellers decided to sell some of their milk powders cheap before the year ends. And that means that at the start of the calendar year, usually financial years in many Western European countries as well, there's no real urge to sell. We're still in January, and that even though we've produced a lot, the Christmas weeks are generally quiet. So the start of the year is always a bit slow in building the stocks that you need to sell. We've sold a lot before the end of the year. We haven't really built the pressure at the start of the year. So I feel like that's a big explanation on why you might see a market today that's not really full of milk powder that really needs to be sold.
Yeah. Under no pressure to do so.
No, not yet.
Yeah.
We got a really good question, I think,
Yeah.
and also a question about a region we've neglected so far in explanation. That is, and I'm going to try to put it live on the screen for everybody to see. And that's the question: if there's any commentary from you, Jasper, I assume from you, on the US non-fat market. Is it turning out to be tighter than expected, with more skim solids going into MPC and ultra filtered milk after the current short covering? When will the market correct?
When will the market correct is always a tricky question, but I think we can explain a little bit on what's been going on. Non-fat markets have been moving up very rapidly. I'll actually look at the CME call prices over the past couple of weeks. And if we look at the non-fat market, it's moved from $1.18 a pound at the start of Jan. Interestingly, the day before the global dairy trade event took place. And it's moved up until $1.46 per pound as of yesterday. It's really been driving up the fastest, which is really interesting. There's a lot of things going on in the US right now. Purely focusing on dairy, there's massive snowstorms and transportation issues around the country. But I think the main thing, and that's ultimately why we feel like the CME call price has adjusted quite quickly, that short squeeze that we've seen hasn't just appeared in Europe on the EX, it's also been appearing on the SGX and a little bit on CME. And what we've heard is that a lot of these short positions, needed to be bought back or got turned into spreads. Quite technical, but essentially there's been a lot of demand for people to try and hedge some of the positions that they've taken on futures markets. And since CME call is one of the places where you can hedge against some of your futures exposure, we really see that even though there might not be that much product, I think it's already in the question that some of the actual physical volumes went into MPC, went into ultra-filtrated milk. If you do need to buy it back on the CME call, that it kind of creates I wouldn't say a vacuum, but it's just creating kind of a subset of the entire market that's even lower or less available in product than the rest is. Ultimately, out of all the regions, we see that in the US, a lot less milk moves into milk powder. Yes, it's being moved to MPC, it's being moved into other products. But I think it also plays a role that the CME call is a kind of a small portion of the entire dairy industry, and when that one dries out, it doesn't necessarily mean that the entire country is empty of milk powder.
And do we have any reporting on MPC production levels? How they've changed?
Yeah, we have. I will look it up in our production widgets. So as I mentioned, in the US, I will show first that the total non-fat and S&P volumes haven't increased to the level that we see. It's actually quite lower. Just looking at non-fat, we see that the volumes are still okay, but they're below last year's volumes. If we take MPC, we do have production numbers available for all milk protein concentrates in the US. They haven't increased to the same extent either. So we have seen a large surge over previous years because expansions came online. But at the moment, it doesn't seem like all that product is moving into MPC. It's really rather moving into cheese and whey. That's really where the growth is.
Clear. We have a question from the chat. When we're going to get to cheese, we'll get there. We'll get there today. But if I look at your list correctly, we're going to start off with whey proteins first.
Yeah, I had to talk about it, not necessarily because we've seen a lot of change, but because we're still reaching for new heights when it comes to pricing in WPC 80 and also WPI. Global markets are incredibly painful, or at least painful to watch as a buyer. Not enough product, a lot of buyers interested. It's just really creating a tight market. And now there's many trade agreements also taking place, the EU and India, US and India. So there's many kind of moving pieces on the board. And for whey products, that's one of the regions where, or at least one of the product groups in which the EU-India trade agreement could play a role. Because India will lower the tariffs on, for example, lactose and milk protein concentrates as well, from Europe into India. And that might create a bit of a difficult situation for some US sellers, depending on how that trade deal plays out. So moving pieces on the board, ultimately still a tight market, and we're still looking to see how high these whey proteins can go. And yeah, I mean, we've talked about whether it will reach 15. Well, if we look at the US price in euro terms, it's actually already exceeded 15. So we got there. And if I talk and speak to many players in both the European and US industries, the problem is not getting any smaller.
Clear. Shall we do changes to US dollars quickly, just to get, because I think the currency here also is one of the moving pieces on the board.
Absolutely. But $18,000 a ton, it's an incredible price for your whey protein isolate, whey protein concentrate 80. And also for WPI, we're Europe is slightly more expensive than the US, but almost €28,000 US dollars a ton.
Okay, uncharted territory yet again.
Yeah.
On to cheeses.
Yeah. Cheese is wrong. There we go. Cheese is a bit the odd one out. We haven't seen a lot of activity. That doesn't make these markets boring, because underneath the surface, what we see is that more and more milk is being streamed toward cheese, because also whey is doing incredibly well. And we are starting to see that market kind of move a bit fundamentally. On the pricing part, we haven't really seen much change. As I mentioned in previous dairy cafes, I think we've been hovering around that 3,000. I'll zoom in a little bit. For mozzarella, we've been hovering around that 3,000 level for a few months. It's moving up slowly because we see some buyers locking in these relatively cheap prices of mozz and also Gouda. But fundamentally, there's no reason to really move up to €3.5. But I think on kind of a bigger scale or trying to zoom out a little bit, cheese is one of the product categories where we have a lot of expansion, but there's only also one of the product categories in which we see consumption grow. We, as European consumers, eat a lot more cheese. US consumers eat a lot more cheese. Asian consumers start to eat more cheese. And it really starts to play through in the global market. So our demand for whey and our demand for cheese is really what could kind of make a small split between cheese markets and butter and milk powder, for example.
Feels like an interesting combination, eh? That we have a combination of the health craze with WPI, and we have more cheese. It sounds like a good life to have.
Yeah.
And let's look at blocks, but also maybe let's look at cheddar in Europe here as well.
I think it's a good point to add. So cheddar curd, we have a European VPI there. This, like Gouda and Mott's, hasn't really moved, but the interesting part is if we have a look at the cheese blocks, for example, we just looked at the US price for non-fat, and at the same time, we've also saw a bit of a change in cheese sentiment. Yes, it also moved up because the non-fat price is moving up because the butter price in the US has also been moving up. But it simply doesn't have the strength because we have so much production going on, right? And they have to start exporting. And that's also what we see for mozzarella, for example. If you look at the US price compared to the European price, they're cheap. They're ready to export. They need to keep the volumes moving. And that will ultimately also play a role in some European products as well.
Yeah.
So
what is there's just a question. What is cheese blocks? What is
cheese blocks is the semi-call version of a cheddar block. So essentially, if you want to compare European, US, and Oceanian prices, you have to compare cheddar with cheese blocks because this is cheddar, but they've named it cheese blocks on the CME and CME call.
simple?
You also have barrels. I've
There's
seen
also barrels.
seen some
Yeah.
photos of ridiculously large barrels of cheese. It's a fascinating thing to look at.
Okay, that's cheese is done.
Yeah.
Does that mean that it is time for? I still see an import-export graph on your.
It's time for the next part.
Awesome. In that case, Jasper, I'm going to walk you through a scenario that I discussed with one of our customers recently. And it also coincides with a bit of the new feature set that Vesper has. It's a combination of being able to both upload your own data now, so use your own data within Vesper, but also within cost models to create your own benchmarks, to really customize them. And let's take an example of that because this is a customer of ours who is buying AMF. And they buy AMF not on the VPI benchmark that we have for AMF, but they buy it based off of the Kempton price with the multiplier on top of that to go for fat. And now my question would be, Jasper, have you been using cost models at all?
A little bit, but a lot less than I should.
Yeah, which you probably, because you're a dairy analyst, you don't necessarily look at croissants that a lot of people make with these cost models. But actually, there's a big hidden feature set in there. So if you go to create a new cost model, and if you give it a name, so in this case, we would be AMF and then maybe Kempten. Kempten, really good. And then you leave the currency as is. That's fine. Access you can leave as is. And let's add a product. So what we're going to do is we're going to add that Kempten price. And we're going to take the butter price that they have there. And then we're going to add a recipe share. And the multiplier they had is they added a 20% premium. So to correct for the fat content, more or less. So we'll put that 120%. So we're going to go over a whole product. The only thing you need to do now is save, unless you want to add more fixed costs, but we'll just save this as is. And what you can now do is you go into you have this price over time, which you're adding 20%. Maybe you can do it in your head as well. It's not difficult gymnastics yet. But I think where it gets interesting, if you go to the price comparison widget, and you now maybe first load up that one again. So this is, so you go, you need to do a quick refresh of your screen, otherwise you won't find it.
Yep.
As it's just been added, and now it's been loaded into there as well. So in this case, you're going to search for the one that you just created. Well, AMF Kempten, there it is. And what you're going to see that in price comparison. But if you now add to this our own AMF benchmark, and this is what the customer is really interested in, to see, hey, does this contract make sense over time? And then he zoomed out a bit and looked at, okay, hey, what is actually happening between these two and which is more favorable? And now this might be quite difficult to see over time, but if you now load a spread into here between these two, you're going to be very easy to be able to see over time, hey, which one's more interesting? And that means that this spread, whenever it is at a negative, that means that your Kempten contract is more expensive. So over the past, well, probably around a year,
Yeah.
you're going to see that it's not been the most favorable one. And before that, it was quite a balanced one. So it makes sense, I think, to have a contract. But over the past one, you're going to see that spread is really increased. And also over a long time has been very negative if you're a buyer in this case. So I think this is a really interesting one. You can totally craft your own benchmarks where you can see your own multipliers. Also in the US with NPCs being bought based on non-fat multipliers. You can test out different things, which is most interesting, really recreate contract structures. So we're very happy with that.
Yep.
And then the next step with that is bring your own data. So where you can also, if you want to upload your own purchase prices for AMF, compare to these, see what's more interesting. You can very easily go into the new left bar and go one bar further, and that you're going to see your data section. Yeah. And from there, if you add that, you'll be able to create a new price here as well. So that, and if you call it AMF purchasing, you can just very easily, if you go ahead there, and then you can give a description, you don't have to. You create that, and you can now just upload a CSV with all of your price there. If you click on it, it opens. Yeah, and then you can just upload a file. You can upload in bulk the CSV. You can use your template if you want.
Wow.
And then if you preview it, you've done it already, and then you import it. And if you now go back to that graph again.
You need to save it first, I assume.
Yeah, please save it. Sorry, that's a rookie mistake I make all the time. And if you now go back to that same graph that we were just looking at, and what you're going to see now is if you go to products again, then you're going to see the your data section over there at the top.
Yeah.
Yeah, well done. That's an interesting one.
I need to reload.
And let's see if we've cracked the code. We have not. Did we save it correctly? It's always love a live demo when it's going on.
And that should appear there.
That should, yeah, then you can add that and then you go from there. So that's a really combination where you can make Vesper your central data hub. You can bring everything in there, work with your own benchmarks, multiply them, add them, correct them. So that's, some cool additions there on that front. We found it there.
Really.
Took a second. And now you can plot that as well. And you can change the spread to see whatever spread you want to have. But very easily work with your own data, compare it to our live data sets as well.
Yep.
So just throw in a CSV, upload it, and turn that around. So we're very excited to see people getting more use out of Vesper. Also, a few more steps that they have to do outside of Vesper in Excel, for instance, now being able to do within Vesper. So I would love to keep you here. If you have any questions about this, or you need any help to get this started, if you want to have more information, I'm going to start a small banner where you can reach out and we'll help you, walk you through it.
Yeah, because the hardest is just to set it up, and then it's kind of easy to follow, easy to take a screenshot if you need to put it in a presentation.
Yeah, and I think every good purchase or every good sell.
You want to compare it to what the market is doing, and especially if you have those contracts as well. And we always push as well to start renegotiate if you have long-term contracts and see what's out there. You have more and more suppliers that are also taking VPIs as your base contracts. And yeah, with Euronext Vesper link coming up over the coming year, that's going to be even more. That's going to bring even more credibility to these benchmarks.
Yeah. So exciting stuff. And as Seb said, it's a one-click export to your boss if you did a good job. So make use of that if you need it. I think that's all for today. If anybody, I saw another question about any news on butter. I'm going to redirect you to the latest report where everything's going to be in there. There's a new report, of course, coming online tomorrow, as today is a Tuesday, not a Thursday as usual.
Yeah.
That's all from our end. We'd love to see you back here in 2 weeks' time. We'll be back on a Thursday.
Back on Thursday.
Yep.
Yeah.
Love our Thursday sesh. See you guys.
Thank you for joining us.
Bye-bye.
Bye-bye.